Hey everybody, Brian here from quantlabs.net. Just going to try to finish off some option strategy combos with longs and puts. Basically, there are two ebooks that I have mentioned. I'm working on the second ebook. This is specific to, found out the CME, Self-Study Guide to Hedging with Livestock, Futures, and Options. So the only thing I'm taking out of this book is the first chapter on, actually these two chapters here, option strategies for livestock buyers and sellers. This side is obviously the speculator for buying commodities. This is the hedgers, and each one has two strategies, so I'll be doing 4 videos for this. Alright, so even though it says livestock futures, I think this can be applied to pretty well any commodity. So let me just show you the first strategy that we've got here. Alright, so what we're going to do is there's 2 strategies in each one of these. The first one is option strategies for livestock buyers. So come in here at page 39. What we're going to be doing is this first strategy, long call maximum purchase price equation. So we're going to calculate that maximum price. Here are the initial conditions. We are having our first futures set at 130, premium set at 315, and our basis set at $5. So in the code, based around this table, we have 3 separate option or future prices. First price is for the 120 basis, gives us a new cash price of 125. This means the option will expire worthless, but we still want to calculate our long call gain or loss at 315, which is the premium. But because the option expired worthless, so we're maximum paying at 315, which is the premium. So that puts us a purchase price at 125 at 125 plus the max loss of the premium at 128.15. Second future is we've got here a cash price set at 135. Again, our option expires worthless. We have a new call, long call gain or loss. Again, we have a loss, so because the option expires worthless, so we are paying out max premium, which is our max loss, and then the purchase price becomes 135 plus 315. From there, if our August futures is at 140, basis of 5, the cash price at 145. We have the difference here of the call option at 130 and the futures at 140. We have a $10 call option value or gain there. So we have a gain actually on the option or on the long call of 685, 10 minus the premium, and we get ourselves a new purchase price. So let me just show you the code now. The code is going to probably insult a few people. I purposely kept this real simple. I'm going to do the same thing with the other examples I'm going to show off this PDF document, but I just want to keep it really simple so that newbies can kind of understand it. So what we have our futures price, as I said, at 130, premium set at 315, or basis set at $5. So what I want you to realize, you have to pay attention to that chart, the table I just showed you in that PDF. This one right here, found on page 40. Okay. So from there, what I've done is I create 3 arrays, one for the purchase price of the different conditions, and then we also have one for our cash price as well. Okay, so this is our first example. We set the cash price at 120 plus the basis, have our purchase price of the cash plus $5, as we said in the first example, the option expires worthless, so our new purchase price is a cash price plus the premium. Second example is, this is what it will display here, which matches the first row. Second example is 130 of the futures price plus the basis, and our new purchase price is the cash price plus the premium. Now remember, our option expires worthless, so as a result, our long call change is, let me just, yeah, our long call change is 0 really, or sorry, at 138.15 as showed in the table there. So our third example is the cash price, the future at 140 plus the basis. Call option value becomes the difference between the futures and the call option of 130. The long call change is the call option value, which is this, the difference, which is really $10. And the call option value minus the premium becomes our long call change. Purchase price is equal to the cash price minus the long call change. So if I run it, as I said, everything is matched up nicely with our table. The only difference is I just put the long call change in here instead of not putting in here because it's 0 because the options are worthless. Hopefully that'll help you out, and just to calculate this in the C++ side of things, and you can generate some nice little strategies around this. Talk to you later.